Okay, today is May 7, 2014. Let's take a look at some of the ETF on the indexes and also some momentum stock. Let's first take a look at the spider. This market is really tricky, and I think a lot of people call it frustrated. And you gotta be really pay attention when you trade in this market because it is so volatile and things could move so fast. If you don't pay attention to it, it forces even the experienced trader to make stupid mistake. And I'm also speaking for myself as well. It's not we are not prone to these mistake because things are moving so damn fast. Sometimes that if you don't focus or try to do too many things at one time, you could be holding a position that you want to get out and you forgot, have you completely got out of your position because you're scaling it, a portion at a time. So those are the kind of stuff, I think in this market, it's not only, a little tricky, but it's also kind of frustrating when you see yourself committed to those stupid mistakes that I call it. So we just, just try to don't trade too many things and just keep a close eye on the stuff that you're trading. Otherwise, it could cost you. So let's take a look at the spider. We see that spider, it was down, and then it came back throughout the, when Fed chairperson, Yellen gave the testimony. Then the market seems to sort of got a little bit of a turnaround there, and uh, and then along with the Russian guy, it's pulling the troop off out of the, away from the border and that kind of stuff. So this market is all, you could find any kind of excuse to say, to make this market going up. But at the end of the day, we're basically looking at this high here on the S&P or the spider here at this 188.25, 188.88, which is the S&P 500 1890.90. Okay, so right now it's trying to get back up there, and I wouldn't be surprised that we might get back there on an intraday basis. I'm not sure that it will be able to close up there or not, but we'll see. But certainly if we're looking for it to come back and pull back on the downside, essentially we're looking at this level here. And also you see these arrows that I put on here. The reason I want to put it on there is basically to highlight that level. How important is that level? Okay, you look at this right here. It closed at 184.66 on January 15 of this year. And over here, it opened at 184.65. Okay, and then here, the low is 184.66. And over here, the close is also 184.66. Right, then we come over here. Here's the low is 184.65. Right, you could say it's coincident, but whatever it is, I'm not even sure what this level is. The low is 184.96 on this one. This, so you could see that 180, this level here, this 184.65 area, that's going to be the key level if we're going to come down. And if we're going to hold, then maybe we will get this, maybe this little bit of possible, you know, uh, higher low and higher high to get this trend get up and take out this all-time high here. Okay, but if it can't hold this, then we'll probably be looking at for it to come back down to somewhere around this particular level here. Right, this low over here, which is this close, is 181.51. Right, and if that failed, then we're basically looking at to come back down somewhere around this 174.17. So that's the spider. So the near term, the immediate level to pay attention to is this 164.65. I mean 184.65. Okay, and then we'll talk about the Russell 2000. Right? The Russell 2000 IWM, the ETF. You see it been down all day, and then it just near the end of the day, it kind of came back up and actually closed slightly positive, like it was up 4 cents or something like that. And even the Russell 2000 index closed up in the green. So you got to be watch out for this little bit of a doji hammer here. Although it's still under the below the 200-day moving average. I don't know what's the big deal about that. There's a couple of talking head on TV was talking about closing below the 200-day moving average. But the key thing is this level here that we want to keep an eye on. Right? If it breaks this level, which is Here's the closing level is 108.65. So it'd be somewhere around the 108.65. If it closed below that level, then we probably want to see maybe if there's a little bit of a fake, head and shoulder baseline there. Because I'm basically looking at this particular head and shoulder pattern here, and I'm looking at this basically as the possible baseline, the neckline. Okay. Now it could be, it could also make a non-ideal, non-perfect head and shoulder pattern that this could be the little bit of a neckline here. So we might see a little bit bounce here. If it come down here and bounce, then maybe a lot of people might interpret this as a little bit of a fake out, fake move on this head and shoulder. But don't be too hurry, right? See if this thing could come back up at this level here before you categorize this break as a fake out, because it might be just continue to come down. Okay, so watch these level on the Russell 2000 or the IWM, and essentially we're looking at the 108.65 somewhere around there, and also this 107.25. Okay, and then on the Q, right, the Nasdaq 100 ETF on the Q, you have to get back up about this level here, which is let's see what's the intraday high on that is 88.21. So it's about 88.21 that we have to get back up. You can see that right here, if you're looking at the closing basis, right, if I get this line chart here, on the closing basis, it seems like, it got a little bit of a higher high and a higher low here, right? If this thing go up tomorrow, then basically, get a little bit of a higher low. But is that going to be the trend that actually going to change this? That take out this particular downtrend? As time will tell, because I don't think the tech is ready to turn around yet. So it might get a little bit of a fake move and maybe get up here, maybe possibly get back up here at most. Then we might hit resistance and then start coming back down. Now, because a lot of people is looking at this particular head and shoulder pattern. Right, here's the neckline for this head and shoulder. Okay, so you got to see that. Kind of keep an eye on that. Okay, so and the major move, and if I use the Fibonacci retracement tool to get the major move, right? So basically, we're just basically looking for that 200% retracement, right? This is 100, 200 because this is the major move. Okay, then we're basically talking about down here somewhere at this 7650 area. Okay, and that happened to be also the intraday low of this particular day, which is October 9, 2013. Okay, so we got to keep an eye on that. But before it does that, it's most likely going to try to test this 200-day moving average. It's probably going to be bouncing around a little bit, right, before it actually break out. Because if it break down, it probably come back and test it a little bit. Then also be aware of this level, and there's a little price gap here. So we got to keep an eye on that. So it might just come down to this, 147 extension, which is if you draw a Fibonacci retracement, that 141. And that will give you that 80-70 level, and then up here near this 121 extension, that will give you this this particular low here somewhere, or this price gap here. So it's be something of 81.44 somewhere around there. Okay, so that's the Q. Now let's take a look at Apple. Apple been sort of a little bit interesting the last couple of days, because we were talking about this particular flag here, that potential flag. Last week, that potential flag, then it might break out. But the thing is, when it broke yesterday to that 604, something doesn't look right. Okay, and then today it's kind of came back down and sort of confined itself within this little band here. So we got to take a little bit careful look on that. So if I go to the intraday chart here, and let's go back and take a look at yesterday. Remember that it's very important that we pay attention to the price action. Right? Have to look at these candles sometimes. Pay attention to these candle pattern. Not saying that, all these candle and these, evening star, and all those good stuff, but you have to look at the price action, because remember what we talk about, this, combined candle. If we do this combined candle here, let me take this out, right? These two candle here, if we add them up, okay, this is equivalent to a candle that look like this. Right, so if I get the body of that candle, okay, so that's how this candle would look like. So now if you surround this candle with this candle and these couple of doji, then you could see that it is not a very bullish formation, especially when it's on the top, right? What it tells you is that there is a exhaustion on the buy side right up here. Okay, that's why I pull back. So that's why, and if you look at my video from last weekend, we talk about that, the entry level, talk about this 590 level, right? And talk about the stop level. So if you want to recap, go back and take a look at the Apple video that I did on last weekend, and you can see that. And one of the possibilities was that we could get up, get in at this 590 or above 590. So if you were lucky enough, you probably would have be able to get in at that 590 on Monday, but most likely probably didn't, and you could get in anywhere between here if you're not already long, right? Then also mentioned in the video, as soon as we get up to 600, we got to protect our capital and then start scaling our profit. Okay, so once we see this type of candle up here, this kind of formation, we definitely want to think about yanking out some profit, or at least put a protective stop on it, because we don't want to lose our money here, right? So you can see that there's a couple of different places that you could have took some profit off. One is maybe when this candle come back down and went below this opening level here of this candle, or when the price get below this candle here, the close, okay? And at worst, right, at worst, is that if it get back below 600, you got to get out, okay? Yeah, I mean, I'm talking in a term of, in a perspective of trading, okay? If it's investing, totally off the board, okay? Off the table, we're not talking about that, okay? We're purely talking about trading purposes, all right? So, even, swing trade and that sort of thing, right? Because you have to do that. Otherwise, you'd be staring down right now. You basically just, you would have wished that you could have got out, back up here, 600, which is 10 point. Today it came down to the 590. And yesterday I kind of tweeted out to say, this 596, if we lose at 596, look for it to come down to 590. Okay? So right now, I've kind of been chopping around with this 590 area. Maybe it will come back up, come back up tomorrow, and retest this 596 or something, or maybe might even fail to come back up to this 593, between 593 and 594, and it fail, it come break below this 590. Then I'd be looking at the possibility of coming back down, maybe kind of test this 596 here, right? I mean, 586 could it hold that 586, but the most likely that 586 is this particular pattern here, right? This little flag, this support level. Okay, now there's a good chance that you're gonna, overshoot that and go beyond that, and then that's the level that we want to watch, and that is the this 582. Okay, so look for these kind of price action when it get to these sort of potential support or resistance line, because that's what you want to, if you're looking at the intraday pattern, the intraday chart, those are the type of price action kind of give you the clue, is it about to turn or not, right? And also kind of give you some intraday, price action for you to determine, where is the support and resistance, right? So you can see all these things. So that's why, a lot of time when you try to trade too many things, you don't have time to really look into it that much. And that's why don't try to trade too many things at one time, especially at a market environment such as we have right now. It's just too darn crazy. It's just too many things happening too fast, and you could be, just giving your money away if you are not right on the ball on that thing. And take a look at Netflix, right? We could take a look at, start looking at, well, let's come back and look at it intraday later. Netflix here, Netflix, we talked about this a while back about getting this gap fill, came down, it filled this gap here and came back up, retested, and then this earning came out, and then the pop up here basically went back up to the top of this gap, and then now it came back down, and then we say here, the next likelihood is if we break this 300, then we probably, maybe get it down here and even get down to this 270 area, Right? So you could see that right now it's kind of trying to bounce back. Right? And a lot of people probably say, yeah, hit resistance at that 200-day moving average. But in any case, it coming back down, and most likely we probably see it to come back down to this 300 level once again. And if can hold that 300 level, then most likely we're going to be, maybe looking at, this next pivot level of possibly down here at this 240. Okay. Now there's another gap here that it could come down and fill. Okay, this will be somewhere around, what is that level? Somewhere around 206 area. Okay, so that's Netflix. And if we need to go back up, we have to look for it to get back above this particular pivot point here to sort of make this a series of higher high, higher low. Okay, but if you take a look at a lot of these things, it's still pretty negative. A lot of technical damage have been done on Netflix and many other these momentum stock. If you look at the 50-day moving average, you see this, sort of, this thing here is kind of turning down. Same thing with the 20 EMA is okay turning down, and you can see that the 200-day is also trying to turn down as well. Although you say, yeah, we got these little divergence on the MACD, right? If you look at this, sure, we might get a little pop here and then work off that divergence. But right now, with so many, negative technical versus, one maybe a positive, you just don't want to put yourself against that kind of odd, right? So, and here's the Google, and looking at Google, Google is also pretty bad as well. It's just kind of been this downtrend here, and it might be making this, this little bit of a H pattern coming down. Although this H pattern doesn't have too much of a retracement, because if we put on the Fibonacci retracement here, all right, let's see what's that. Yeah, so well, it got pretty close to the well, halfway up to maybe that 618. But again, basically we're probably looking for this trend line here, because we have this long-term trend line coming up, so maybe that will provide some support. And if that doesn't hold, there's a gap that coming down here that might be getting ready to be filled, which is also seems to be in confluence with one of the Fibonacci extension, which is the 127 extension here. All right, so and this level here, see what's the low on that level, is basically 487.49. So it's like 480, 88, 87. Okay, so again, we're basically looking at this gap here. All right, so if it breaks this level, there's a good chance to come down here and test this for support, and it can't hold the support, then maybe we'll be looking at this thing coming down to 450 area. Okay. So Amazon, we also look at Amazon. They are just, it is just as ugly as the one that we just looked at, Google, right? Right, same thing, on these kind of downtrend, right? So look at these pivot, broke this, so most likely it's coming down to this maybe around 280. And if we also put in a little bit of a Fibonacci retracement here, looking at this H pattern, just to get some idea to see what kind of confluence we might get. All right, so this 127 is a 141, so it seems like maybe the next point that we could get at might be this guy here, down at this level, somewhere around the 250 area, okay, on this 141 extension. Okay, what else do we have if we get down to the 1618? No, that'd be 220 down here. Okay, so that's Amazon, and let's take a look at Facebook. Okay, so Facebook, again, we thought Facebook was able to sort of come back up and take out these, these pivot level, but best it could do was come back up to somewhere around the 62. We're basically looking at maybe somewhere around the 65. Get up here. Okay, it came down and filled this gap. Remember the first time it didn't come it didn't completely fill the gap. Then it came down the second time, and then now we got this thing bouncing back up, but it failed to take out this particular pivot on this bounce. So now it's coming down, to this trend line here. Basically, you got a little found maybe a little bit of a support, but kind of maybe it's still expected to come back down and possibly bounce off of this support level here, which is also in confluence with the 200-day moving average, somewhere around that 53 level. Okay? But if that thing doesn't hold, because here's this level, this kind of pivot level here that we're talking about, right? So okay. So if that doesn't hold, we probably be maybe looking at it to come back down to possibly at that 45 level, or if we also take a look at the Fibonacci retracement and see what kind of a confluence we might get on some of these retracement level. There's that 45, right? This 1618 is right at this 45, which is also this pivot based on this this little bit of a swing here. Okay, so like I said, I don't trade off with the fib stuff, but sometimes you show these kind of take a look for some confluence, because then you could see what are those traders looking at, right? What are some of the levels that they might get them to start get interested or create some price action at that level. Right? That's the reason, I also put up the FID, and we noticed that on this 1618, it's also coincide with this particular support level pivot. This pivot level that I got the got this support line or resistance line drawn on there, this trend line. Okay, and then Twitter. I mean, what can we say about Twitter? All right, so you can see that. Let me take this off first. All right, and basically on the downtrend here, and we're talking about prior to earning. Right, we're expecting it to come down to it's sort of destined to C39. So prior to earning, and we're saying that the best thing that could happen is that if we get a capitulation on the earning report and that sort of thing, I think that would be probably one of the best things that could happen to Twitter. Then maybe we could get all those people, hoping for Twitter to bounce, and finally gave up and threw up their hand and then just throw out the share and done with it, right? But unfortunately, it did not give us that. Basically the candle that I was looking for is maybe a little bit of a doji hammer or something like that. Maybe something like this, right? That would be ideal, right, on this day if it happened on that day. It come down, flushes it. All these guys gave up and toss out the share, and the smart money just pick them up, right, and be done with. But no. It even tried to come back and fill this gap here. How ridiculous is that? All right, so the guy said, "Hey, we're not going to sell. The insider is not going to sell." Well, who the heck this sold? 134 million got changed hand yesterday. So somebody sold. Well, who knows, right? Where could it go? So right now, when you get to a no man's land or never land, we basically resort to our old fib two. Right, and then try to get some idea what are some of the Fibonacci levels that could present a potential support level. So you see here on this 29 level, came down close to that 29, right? This 127 extension today and got a little bounce here. Now, does that mean it's going to come back up? Don't know. But if it's going to keep on coming down, then we probably will see it will at least come down and test that IPO price of 26. Right? And that doesn't mean that it's going to hold. Just because it come down and test 26, it might dip below 25 and come down to this 141 extension at 24 area. Okay, that's what the fib line is saying. All right, you could believe whatever you want. Okay, I'm not holding Twitter right now, and I wouldn't be holding it until it showed me something that it has found a bottom and it has base and consolidated. So good luck if you're holding it long. I wouldn't even go bottom fishing. It's just like catching a falling knife right now, or the potential of catching a falling knife. So, but hey, like I said, different stroke for different folks. So, and here's Tesla. Right, Tesla, we talked about Tesla a while back also, that it come down, fill this gap, and then it, sort of came back there, came back up, and and we say, here's the level that they have to hold, right? And it held there, it came back, close about or near that level, and then bounced up, right? Then came down and tested again and closed back above it, right? So it held again. But the thing is, it wasn't able to get above this pivot, right? And then now today with the earning coming out, and God forbid if you traded to earning, I hope you traded on the short side. But who know, right? Nobody know, was this thing going to go up or is this thing going to go down? That's why I don't trade to earning, right? So right now we're basically looking at something. Maybe it could come down here and test, this trend line and near this, this 200-day moving average, right? And I even have a little bit of a pullback channel here that it booked this. And but the unfortunate thing is the 50-day moving average is also rolling over that. So that's not good, right? But doesn't mean that it's all negative. If you have good earning and it popped, then it could be headed up, you know. But right now, that doesn't look like it's going to do that anytime soon, because I think with this earning, they really beating it down. So right now here we got this little gap here, right? So essentially came down to this little gap now, right? Okay. So if we look at this Fibonacci retracement based on the close, okay. So because here, let me do this. Okay, so I'm drawing it on this, the highest close here, to the breakdown of this low here. Okay, so you got a break right here, and which is also right near this point here. Okay, so that's the swing that I'm drawing the Fibonacci retracement, and here these 127 extension, right near this 200-day moving average, near this 175 or 176, and I also got this trend line here, right, coming off of this base. Now I can move this up to the close. Okay, so you can see that it's sitting right on this 200-day moving average. So that's a little confluence here. So we got 3 technical, point here for confluence, or including this trend line here. So we basically got 4, right? 127 extension, this rising trend line, the 200-day moving average, and the lower trend line of this, declining price channel. And it's all converged somewhere around this 176 or 175.75 area. Okay, so that's basically got to keep an eye on that level. And if that doesn't hold, all right, let's put a candle back on. And if that doesn't hold, then we'll probably be looking at, down here somewhere, this pivot, which it would be somewhere around this 140. Now that doesn't mean that we couldn't, find some support up here, which is also this particular pivot as well, right? Okay. So you got this pivot, this closing high, right, somewhere around this 1618 extension, right, and that's about 156. So those are the levels that you might want to keep an eye on, on the downside. Now on the upside, we'll basically have to get back up above this pivot. Right, so this be somewhere around this, 219, somewhere around there. All right, what is this high? Yep, the high is 218.66. So for all practical purpose, this right here is 219.33. So basically like 219, 220. Okay, so that's what I have to get above, and then maybe put in a higher high, higher low, and then start working itself up. But for now, if we take out this 175, we'd be looking at lower prices for Tesla, possibly come down at this level here, 156. Okay, and then depend what you're going to do from there. We might be also seeing this. Yeah, I know a lot of you guys probably, yeah, this is a technology company and all this growth and all this stuff. Look, I'm not trading this for 2 years. I'm trading this for 2 weeks at most. So we have to look at what is in front of us right now. Okay, we're not talking about investment. Now, so request that for FireEye, this is a sort of cybersecurity software company, right? Okay, and it's a new IPO. I haven't traded this guy before. Right? You can see that again, right? Pay attention to these candle formation. This sort of screaming at you to tell you to get the heck out of here, right? Because if you add this candle, what does this come up to be equivalent? Right? It's basically here's the this candle's right. Here's the link of this candle. Okay, right, and you got this open here, and here's a close. So you basically this is like a little bit of a doji, right? Okay, that's the candle that you're seeing. Now, replace this two candle and put this right here. What do you see? You see, this kind of formation, right? Oops. I mean, is that a bullish candle formation on a chart pattern to tell you to go buy more? Right? you know, I would be running out the door when I see this, right? Because see, so and then the following day it just gap out. If you were not fortunate enough to get out, near the close yet, on this particular day, take the hit, okay, and get out. At least you got your profit, or if you got caught, you won't be staring at this thing down, right? So right now, essentially, it's coming down here and it's even booked to this low. So once again, we have to resort to a little bit, a good old friend of Fibonacci retracement to see where this is going to take us. Right? Could you believe 15 or 16? I mean, that's your number is as good as mine right now, right? Okay, at least I'm not like those people that just pull number out. I said, based on the Fibonacci retracement, if I use this swing, then the minus 127 extension will bring me to 1575. And if I use this particular swing point here, this right here, right? Oops, this right here, okay, this swing here, right? Then it gives you up maybe somewhere around 21. So you could pick any number, 21, 1575, or anywhere you want. Because right now, we have no idea where it's going to find support. Right? Yeah, tomorrow it could come back up and hit this 36, 37. Who knows? Right? So with that kind of uncertainty, would I be putting my money on it? Absolutely not. Neither on the short side or on the long side. So that's why, trading is about playing the odd. If you don't even know where it's going to go or have any idea or with some probability of what it might do, why even bother to look at it? So, okay, so those are the stuff for tonight, and hopefully the market haven't frustrated you too much. It certainly from time to time frustrates me, but hey, it's all good. It's not going to be the last time, and it's not the first time. So just keep trading and be careful. Good luck.